Good morning, everybody. It is Thursday, and this is the Euro Trade. I'm a Market Stalker D. I've been trading for 18 years. I specialize in some of the more weird products like energies markets, precious metals, and the likes. Some of the products that you may not see very often anywhere on the live streams on YouTube. So let's get into it. I am kind of watching RBOB and crude oil. They are very much correlated products. So one is a raw material, the other one is a derivative of that raw material. So they do have this incredible correlation, with RBOB being a little bit more volatile than crude oil. But whenever I'm going to trade RBOB, I will always reference crude oil levels and then express my position in RBOB. So also later on today, me and Aaron, we're going to be taking over the fast markets. So you will see us quite a bit today for like 3 hours during the fast market segment. So that should be fun. Bruno's saying, oh, new colors. Yeah, I felt like the other color scheme was a little bit kind of too dull for the live stream, so I figured I would go a little bit more oomph, a little bit more chavvy on the color scheme. All right, let me analyze what crude oil is doing. As always, I'm going to start on a massive time frame. Monthly chart, still largely consolidating. Still that range from ballpark 76.63 on the monthly chart and 53 to the downside on this particular contract. So we'll see what they want to do with that. We're kind of in the middle of the range in that monthly chart. So that's not ideal, but also not that unusual for crude oil. On the weekly chart, again, another very big consolidation. So we had a bit of a base drop, but this drop kind of failed to hold below the previous candle low, which is making me think just maybe they have a little bit of space, maybe up to 64.25 before we hit the nearest, I call them conterminous lines. They're basically market shifts as the market starts rolling over. Then there's this point where both candles held the equilibrium. And then when one of them goes into a sell-off, it creates something that we call a technical supply. So we could definitely get there. What do we have on the daily chart? Daily chart has some signs of a reversal. Whether that holds above this range high at 63.64 remains to be seen. But I also need to make sure that I'm aware of that line at 64.75. So I'm just going to pop in a little line. Just a little line. And I've got quite a few lines here as well, which I'm going to go over in a minute. Looks a little bit messy, obviously, because it's a massive time frame, and we're going to go down to the intraday time frames. Now, let's have a look at the 4-hour chart. 4-hour chart for now is establishing a trend that we started in Asia. Not a massive trending move, but it keeps kind of pushing higher and higher. This actually started for the settlement fade. Now, I talk about the settlement fade all the time because that's one of my setups that I absolutely love trading. So let's see, 30-minute chart. Settlement fade is basically a setup that starts usually about 2 hours before settlement for NYMEX. And it tends to reverse the day's trend. Now, how far that move goes is anyone's guess, but on average over the years, and I've been trading crude oil for 12 years in prop firms almost exclusively because they put me on an energy desk, and then I really like the energy products. So I figured out this really high probability setup towards the end of the day, which was actually a very well-known set up across the board in the prop space. settlement and fade, as we like to call it. So basically, you establish some kind of a range for the lunchtime in New York, and then come sort of 6 p.m. UK time, they start to reverse it, and you can see that drop here. Now, obviously, we have low volatility times, high volatility times, but on average, you can generally capture between 30 and 40 ticks. So it's not like some massive opportunity. But what happens after the settlement yesterday is that they immediately reverse it and they start pushing it into this uptrend that has lasted through the Asia time frame. Now, I don't necessarily want to fight that. When I'm looking at the value areas, so first we're going to look at the value area from NYMEX, because NYMEX is the main product. There's no point me looking at like some London levels, because it's just not really that important, since most of the volatility is done in NYMEX. And NYMEX value high is at 62.80. NYMEX value low is at 62.42. At the moment, we're still hanging above that. I also have some options levels around those areas. I have the end of day call resistance from last night, which was sitting at 62.75. But if you actually go up, you will see that there's a call resistance and a gamma wall from the 0DTs all the way up to 64. So that is definitely an option. I don't like being long crude oil, I'll be honest, but whenever it's failing the auction to the upside, I cannot just ignore that, because it is down to the objectivity of the trader to figure out whether the reversal is in force or not. But I'm going to say that we probably will push higher. Not sure what's going to happen around GX3. 63.50 is where the next level with the most open interest in options chain is located. So maybe we can run up to there, get maybe a trade or two whilst they're trying to decide where to go. They definitely attempted to go into Frankie fake out, but that has no follow through to the downside. And at the moment, I've got nothing else but the failed auction, uptrend from Asia. So let's see whether that kind of holds. But instead of trading crude oil, I'm going to try trading RBOB instead. Now, RBOB is very thin at this time of day. When it comes to the quantitative extremes, also a measure that I use to see how much space I have for any particular setup, both the average session ranges and the 24-hour daily ranges are intact. Like we're nowhere near them. And the way I use them is kind of in three ways. One of the ways is to look for U-turns once we reach those areas. The second one is to run playbooks that tell me that we're running to them. So away from, like, let's say the value all the way up to the ADR or ASR high. And then if we run over those levels pretty early in the day, like typically Asia or London, if they smash through them and just keep going, they ignore them, that tells me that there's a higher chance of a trending day, because we did something that's an outlier, it's unusual, it did not respect the statistical norms, and therefore you're looking at a slightly unusual day. So hopefully that puts a little bit of context to the entire picture. And we'll see whether they can gather up some volumes to actually push this anywhere. Now, keep in mind it is still August. It's been pretty quiet, mainly in equities, apart from like a couple of isolated, sorry, not in equities, in commodities, apart from a couple of isolated days where the markets went a bit nuts, which can also happen at low volatility times. Why? Because nobody's there to trade it, right? So whenever you have low liquidity environments, they can be emphasized so that somebody plops in a bigger order, and that has much more of an effect on the price than it normally would have. So yeah, let's see if we can find some longs. So like I said, I'm going to use RBOB here. Look how thin that is. Like if I was on the live, that would be very painful. And you know, September can't come soon enough, really. Now I am going to use a larger stop here. I normally never really use, or not never, but most of the time I won't use less than about 75 ticks in RBOB. But you know, also I'm talking and I'm busy with reading chat and paying attention to interesting comments and questions that you guys might have. But yeah, let's see if this RBOB can actually continue this move higher. To me, RBOB is actually a little stronger than crude oil, and I'll tell you why. If we look at how the price is behaving around the initial balance, crude oil tried to extend the initial balance and then created a failed auction, right? But RBOB didn't even extend the initial balance. So that might mean that we have RBOB a little bit stronger for this time of the day. That can change. Correlations change intraday. But in general, one of them will always be stronger on the day. At the moment, they are very, very correlated. It's almost a factor of 1, with this little detail that RBOB is not smashing through the initial balance low, whereas crude oil is. So you can just sit and wait. Okay, let's have a look at who's in chat. Who is in chat? We have Alex PA. Obviously, this is all for educational purposes only, not to be used as follow blindly any trade you see on TopstepTV. That goes for your trade as well. So if something is matching your plan, your analysis, then yeah, by all means. But otherwise, these sessions are there to make you realize how different traders approach the markets in a different way. Heating oil, don't you trade? Yeah, sometimes, but heating oil, like, let me show you the dome of the heating oil, Mr. Petty. See how gappy? It's like nothing, 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 order, nothing, 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 order. So until that changes a little bit, and this is very thin for heating oil even. So really, heating oil is not the product for this part of the day. It is a product when they start to populate the dome. Otherwise, what's going to happen is that you will plop in an order here, and because there's no counterparty, it's just going to hang on the exchange until somebody else does an order. And then, you know, there is a way to maybe wait for one of these prices. This is if you're in a live, not in sim. Obviously, it's like in sim, they have order matching, but it's really not... it's not the same. You know, you see all these sim farmers these days running, you know, 20 accounts, and everybody's getting super great fills, even if they're trading ridiculous amounts of size. And then they get into the live and they try to replicate that, and then even on like 5-6 contracts, they're like, oh, but the platform didn't fill me. And I'm like, don't want to burst your bubble, but it's not the platform. It's the exchange. So yeah, there's definitely a difference. You know how Michael Patak says trading live versus trading sim is not the same. Definitely not the same. And if you're trading these thinner markets, you really have to be very aware of the liquidity on the dome that we have, the depth of market, which is what the DOM stands for. Bit of a caffeinating fix there. Okay. I was actually thinking, you know how we have those parts with Alex Ferreira, the skier that is with Topstep. He is like ice, heat, ice, heat. I was thinking like of doing a skit, but you know, make it trader style, and then going nicotine, caffeine, nicotine, caffeine. Do it all over again. So yeah, I don't know. I just have like strange ideas in my head for videos. I do need to go back to filming though. So yeah, anyways, whilst we're waiting for this to develop, I didn't sleep all that well last night, and it's not that, oh yeah, I slept terrible. I was actually coding until like 1 a.m. And this is what happens when I go back to coding, right? It's so easy to lose 8 hours. It's absolutely hilarious. You are kind of sitting there and going, yeah, Bruno, I'm not going to say that. Yeah. So yeah, I was starting like 2 days ago. I started looking at the TopstepX API, right? And it's been like a couple of years since I've actually sat down and looked at code, and it's weird with coding. Sometimes if you spend some time away from it, you get back to it and you're like, what is all this, these Greek letters? I have no idea what the hell is going on. How do the methods work? Functions, that's right, there's functions. And then it slowly sort of comes back to you. And so now I'm like 2 days into that, and I've gotten really into it. So I'm like, oh yeah, I forgot how fun this is. And it's fun, but it just literally eats your time, man. I don't know what happened. Like I literally looked at looked at the clock, and it was, I don't know, I thought it was like 2 p.m., right? Then the day went on, then I had an alarm because I had a meeting. So I was like, oh yes, I have to have a meeting. So then I did the meeting, and then I went back to coding, and then I looked again, and it was like midnight. I totally missed the whole maintenance period. Didn't even realize the markets were like, because I was working on some strategies and doing some of the I was actually creating the initial balance to be like consolidated in a 1 hour thing, and then I was testing things and a whole bunch of stuff. So I'm like, yeah. And then the next time I looked at the clock, it was like 1 a.m. and I'm like, oh no, I have to go to bed. All right, yeah. Deeyana, I'm going to look at silver, yes. I tried trading the fade of silver yesterday, but just never happened. I got involved here because I had some levels up here. And then I just watched it. I think I managed to obtain a price. Yeah, what was it? 37.80. So I waited and I waited. And it was like 3 hours and nothing happened. So I was like, okay, back to coding, right? And as I was coding, I kind of kept an eye on it. And this is August, you get a move in one direction, which was brilliant. And I'm actually going to change some stuff around because I've noticed that this time of the day, it's a bit of an odd time of day. I've spoke about this before for metals in particular because LME is not open yet. London typically tends to bring gold and silver into a complete sideways barcoding nightmare of a price action. And then LME starts trading and everything livens up again, right? So I've actually started to use just the LME hours. For those of you who are interested in making your profiles hard-coded just to the LME hours, they are 11:40 a.m. London time, and then 5 p.m. is the end time. That's it, right? And I went back through silver, through copper, through gold, through platinum, and by me moving the profiles to basically anchoring them to the start of the LME session, it actually almost looks like this part of the London session is an out of hours thing, almost like nobody's there yet. The reason why those hours are important is because we still have the ring trading, which is the LME equivalent of the pit trading that is still happening in London. So because of that, I think it's not a bad idea if you are looking at the profiles and the quantitative extremes. So if you have, let's say, Blatek DR and Blatek MP, you can go in and you can, so I'm just going to show you the inputs. I'm not going to show you the whole chart because we've got the chart here. And, this is not my stream, so we have to stay on Topstep X, because this is obviously Topstep TV. But if you go into inputs, in here, I made the schedule 2 into the LME schedule. So rather than that being the London hours, it starts at 8 a.m., I've literally just anchored it to the LME start. And as I was doing all the back tests and stuff, I started noticing much cleaner price action that actually made a lot of sense. So I'm going to start using that. I also know that Coach T from all of the combines and evals and stuff, it said to me, the best time for your trading is 12 p.m. to 4 p.m. And I'm like, well, yeah, I know that. And I just wonder whether that is something to consider, that this time of day is maybe not the best to look for quality setups. This is effectively not the day trading time zone for metals, okay? It is for DAX, it is for Bund, and then you have Asia that trades gold quite a bit, and then the dead zone as soon as London opens. So that's what I've done, and I'm going to start using the profiles in just for LME specific hours. So yeah, silver. Let's start on the large time frame yet again, because again we want to know. I want to know how things are looking on the very large time frames. Massive selling week for July. Right now we're still in that range, no higher high yet. So could this be a slowdown? Now, granted, for the last year or so, we haven't had that obvious of a trend on the monthly. It's been a bit haphazard, right? Lots of overlapping candles. I don't like to see that. Having said that, it is a massive time frame, so let's have a look at the weekly. Same thing. Haphazard, right? Lots of overlapping values, not values, overlapping candles. Seems to have made an attempt to unglue itself, but now it's kind of stuck yet again. So, seasonally, silver. I've looked this up because JD actually asked me, "Oh, I wonder why you say that silver has seasonality things," and I'm like, yeah, I don't know, but I will do some research. And I did do some research, so I can go back to him. There is a big connection with not just like rate decisions and like FOMC, but also the reduction in the demand for silver. So naturally, when you lack demand, what happens to the price? It falls, right? And it usually happens around about this time of the year. We also see those trends kind of slightly continue into September. So do we have signs of this seasonality happening? Let's see on the daily chart. I would say yes. Okay, so we had 14th of August that popped into the newly formed swing high. Then it reversed, then created a drop-based drop. And now, what else do we have? We have this new area, the conterminous line at 38,048. The reason why I call them conterminous is because it means in common, having something in common. So that price point where the equilibrium breaks to the opposite side, it's a common price point for both sides. And because I needed a name for it, us traders, we love naming things our way. Like everybody loves abbreviations. But yeah, conterminous line is a bounce point. So if you get the price is touching it and almost an immediate reaction from it, that means it's a high quality area for further shorts in this case. So keep in mind that 38 level, 38 evens, 38,050, it's not like to the tick, right? It's a zone. So, but once we get there, you might find that we go into another leg down. At the moment, it's establishing a range yet again. So it's again a haphazard move down, but seasonally it could be a good time to look for some shorts, not because I said so, because that's what the technical chart is telling me. But look, we're talking intraday. So if you find that this does sell off. And by the time we get to COMEX, post and cut, or the LME open, and you have something that's telling you go long, it's intraday. Go long, right? It's like, it's your plan. Don't follow my plan. But just ballpark from the very large time frames, I do think that we're having a bit of a turnaround and a possibility to continue to the downside on some days. So hopefully that helps. I'm trying not to, like, whenever I do the large time frame analysis, I'm trying not to put my intraday perspectives into it, right? So I'm just giving you very large time frame orientation points, maybe some options levels and stuff. But, you know, it's one thing when I'm looking for my playbooks, and it's another thing when somebody's asking me, hey, Dee, what do you think about gold in general? So it's a completely different time frame, right? So these prices that I'm giving you, they're just prices to look out for. They're not prices like, days that go short from 38. No, I just said watch 38 because it could be a danger zone. Let's have a look at gold. Mariano. Again, very massive time frame. Monthly chart, no change, right? If you were here yesterday, and I know that you're here most days, Mariano, very, very range-bound, barcodey. Like, I just need a scanner here to go beep, beep. That'll be 3,395, please. You know how in the shops they scan the prices and they tell you what it is? Well, that's what it is. It's a barcode that's telling me that on the massive time frame we've just gone into complete sideways action for months. So how fun, eh? Weekly chart. So nothing to glean from there. It could be a distribution, could be a reaccumulation because gold be crazy. Again, weekly chart, nothing to glean from there. Middle of the range, where is the range? I would say that recently from May, from May we've kind of used 35.40 as a ceiling, 35.37 as a ceiling, and then for this summer months, let's say from July, we've actually used 3307 as the floor. So that's the range. Oh, gold looks a little different on the daily. So, is this a real bullish engulfing 2-bar reversal that we can use to run another long? It could be. It could be. So the only thing I have here is the potential reversal on the daily chart. It is actually touching the conterminous line right now. If this wants to work, if they want to take it away from this level, you should see some really good commitment to the upside. If the conterminous line at 3378 starts breaking down, it means that we're probably going to go and rush down to at least 3340. Back to this demand. This demand is actually pretty decent quality. The lower one, this one is not a true demand yet, but there are signs of life. So could we run up to the highs again? Yeah. Could this also just be a dead cat bounce? Meow. Yes, it could be. But yeah, we'll find out, right? Let's have a look at some options levels to connect this whole thing. And again, gold went into sideways action. Yeah, so sideways now. Watch LME open. And let's see if we can get some levels. The only strongish level here from the options chain is 3380. So 3380. Right now we've actually touched ballpark there, and there is a little bit of life. But again, they probably won't start plowing it until we get to at least the LME open. And sometimes when it's like super quiet, they don't even do anything until the COMEX open, which is 1:30 p.m. London time, 1:20 p.m. London time. So yeah, if we start melting through 3380, That's also where the conterminus line is, which means that that level is not working for that particular time of day. And remember, I have the times of day when I'm expecting a certain assumption on direction that is based on statistical analysis of the past 12 years of me staring at gold and crude oil. So yeah, I will tell you that London, first 2 hours, very sucky. But then we get to LME, everything livens up. So that is the point where you're like, okay, let's see what they want to do with these prices now. Very few days, like I think we had Monday where it smashed down, and then I found a trade and then promptly flattened it because I was clicking away on something else, and that's it. Yeah, let's have a look at lower. What do we have lower? So what is that level? It's the HVL, high volume level. And it's also from the longer dated options as well as the 0DT. So if we start to melt down, now typically the HVLs, they do bounce on the first try. And then if they test it again on second and third test, they typically break down and go through it. At which point you have the gamma that flips from one side to the opposite. So gamma flows are very interesting. They're very they're a bit complex to understand. So if you're a really new trader, I maybe wouldn't be like, oh, is the gamma positive or negative? Like, because at any point you can have the prices rallying up to a certain point in a negative gamma, in a positive gamma, and you're thinking, oh, it's a breakout, but then they run into a strong open interest level and they bring it back down. So it's like, but gamma is positive. It's like, yes, it's positive, but the market makers still need to try and maintain that elusive delta neutral market state. They basically have to be flat in their positions. That's how it works, right? So they try everything in their power to make sure that their overall exposure to the market is flat, which means that if the market runs away and they are not having to, buy more, which can sometimes happen as well. Any old higher level any level with like open interest will act as resistance, right? So there's a very fine balance between them. So don't bang your head too much about that. Just know that if we've touched HVL already, like let's say we tested once during active trading hours, then we test it twice again, it means that the price is having trouble staying away from that area. And yes, it might bounce the second and third time, but the likelihood is that on the second and third try, they will actually start breaking through it because less and less people are then interested. And there's just not enough volume to push it back up, not enough buyers. And as Andre reminded us so many times, why do the prices go up or down? Well, if they go up, there's more buyers than sellers. It's as simple. Or I would add faster buyers than sellers, because I do believe that the velocity of the buying is also very important when you're looking at the volume component, rather than just saying, oh, there's more buyers than sellers. Because I've seen some people plowing in with like 100 contracts, and it only moves the market a little bit. Obviously, depending on the depth of market as well, but it just moves the market a bit and then nothing. But if you have like iceberg orders that are like plowing in and plowing in and plowing in at a certain rate, that tends to give that push in the momentum. So it's velocity and the number of contracts that play a part in how fast and how far something is going to move. But to the downside, if we do start to get a breakdown, I have the implied volatility level at 33.58. Really no notable other big GEX levels, gamma exposure levels. To the upside, we have some strong levels up at 3400, 3405, and 3410. So these prices between 3400 and 3410, we've seen them be reactionary quite a lot, actually. Quite a lot. Like when we were messing around in this area, they were very, very reactionary. So again, I would definitely keep an eye on that little zone. What's that? That's like about 100 tick zone. And because GEX 1, 2, and 3 are just kind of bunked up on top of each other. It's like, you know, a 3-level bunk bed. That's what it looks like. Gigs 1, Gigs 2, Gigs 3. It's sometimes a slowdown in price, so don't just expect it to melt through it and then just keep going. There's usually a slowdown because of the amount of open interest that you have at those levels. So if it does start to run, I would actually be looking at those levels as my target 1, target 2, target 3, to make sure that we are kind of reaching those areas of interest and still kind of taking some sort of profits. It does depend when you go in as well. You know, if you go in right at 3,400, well, they might just smack into 3,400 and reverse it. So be careful. I personally don't like trading into multiple GEX levels. If I'm going to run a trade, I would try to get a pullback and then be away from the potential ceiling level. And same goes for supply and demand areas. Like the amount of times I see people going short into a daily demand, and I'm like, do you not look at the daily chart? Like, what's going on there? No, of course, because they're staring at like 15-second charts and 1-minute charts and 100-tick charts, and it's like, zoom out. Take a plane in the air and see how it is. The good news says, good morning, Dee. What do you think of the MACD indicator? I think it's only good for long-term trading. I don't think it has too much use in intraday. I stopped using RSI and MACD. I actually have a little short about why I stopped using those levels. I even don't use, like, moving averages. I just have them for directional movement. It's like, oh yeah, we're above the moving average. Great. How far, how steep is the slope? Those are the only two questions. But the MACD, I mean, guys, remember the MACD, RSI, and all that. It comes from long-term positioning and investing practices, right? They look at massive time frames that have a lot more information than intraday. So if you try and apply those same ideas intraday, it's not going to work. Like, it might work on some level, but unless you have like monk-like discipline to only trade those signals, the MACD divergences, and to never, ever deviate or FOMO in, maybe it's going to work for you. But I'm telling you, there are more sophisticated methods through, like, there's a reason why we have the market profile. In a very simple way, it can tell you whether the auction is strong, weak, medium, and whether we are due to have a mean reversion gap filled down or up to value, whether we are creating single prints, or as cool kids call it these days, FVGs, upon leaving some of the areas that we started in at the open. It's a very straightforward measure, right? But MACD is just like, it's an oscillator. It's like, great, but where is your entry? How do you time that? Where should your stop loss be? And then people start messing around with the RSI. And I know that we had David Green who was, using that. But David has extraordinary discipline. Like, we're talking top level discipline. He never misbehaves. He never FOMOs in. And, you would hope that we won't either once you've been in the markets for like 30, 40 years, yeah? I'm going to say every so often I still find it like a bit FOMO, like I still sometimes experience FOMO, but the more I practice my framework, the more I practice discipline, I just don't really experience that. I did have a bit of a journey with this London session all last year because one of my main products died on me, so crude oil just stopped moving and had a personality transplant. And that happens as well. So I'm happy that I had other products to look at, but it wasn't easy. I was still, like, let's put it this way. Back in the day, I maybe did like 10 copper trades, right? And I thought to myself, yeah, it's kind of a decent product. And then I didn't look at it for years. So when Carl Hungers told me, hey, have a look at copper, it might be a good option for London, I'm like, okay, oh yeah, copper. Why didn't I think of that? So Carl actually told me to have a look at copper. So I had a look at it and I'm like, yeah, this could be an option. So I spent literally the last sort of year or so seeing how copper lives and breathes through a whole bunch of market states, tariffs, summertime, election year, Christmas, right? So you gather experience. But because it was somewhat an unknown product, and even I had moments where I'm like, is this really a sustained auction? Should I be doing this? Like, it looks like it is, but I don't know. And then I would go in, but I would get spooked by some of the speed that they were pushing it. So I was like, oh no, maybe I should just have a few ticks, like literally the same things that a newbie trader would go through. But it was purely because it was a new product that I didn't know that well. So I started to aggregate data, run my journal. I probably ran through about 8 different combines, learning how it moves and breathes. And then I was confident in it. I'm like, okay, this is the point where it turns around. I also reran some of my counting algorithms. I discovered that it's a lot more trendy in sort of medium normal volatility times than gold, for example. Gold likes its post and my cut reversals a lot. Copper, not so much. Copper, once it has a trending move, it just keeps going. And I actually found that even at settlement for like 5 p.m. my time, when the ring trading, the pit trading version of the LME, when that occurs, they kind of push it even higher for the last few minutes. So it's like, okay, that's not how gold does things. So again, those differences between products are very, very important to note. And then it gives you confidence. So now we're like a year into it, maybe even a year and a half into it at this point. And I just don't, I haven't felt the need to jump in. I haven't felt the need to overmanage or to undermanage or just, I see a setup, I go in, I just wait. That's it. So the more you gain confidence in the way you're looking at things, the better your results will be. I also don't like to change the times of day when I'm looking for setups. So there must be structure. Most of you will look at the markets from the morning till the evening, spending 12 hours of your day. So ask yourself, is that the best use of your time? Are you going to get a random setup at a random time of day? Probably not. Why? Because markets are not exactly random. They are a structured environment with clear events that happen every single day. You have, on certain weeks. So you have OPEX, you have, post and white cut Forex option expiries every single day at 3 p.m. And Forex products, whilst I don't trade them, they're heavily connected to certain commodities, like especially gold and crude oil and RBOB and all of that. So the bigger the option, the more effect of that reversal you will see. And, there's other components that make the market more structured, like, for example, the pit close or the electronic hours close. That always brings some sort of a fade. We have the famous old pit trade, the short squeeze on ES that happens for the last 10 minutes. It's still happening, even though we don't have pit trading anymore for equities or any of these products, really, apart from the LME ring trading. There's still the same behavior. They definitely kept the same hours for some strange reason. I don't know whether it's them kind of going, well, even though I'm at home, I'm still going to trade until a certain time and then go and do other things. So maybe there's a bit of that, but we still definitely have settlement. We still definitely have the reversal into settlement on most days. So those are structured events that you can take advantage of, right? So if you're just sitting there looking at things, you don't know when your setups have the highest probability of working out. Like, for example, for me, I know that failed auction of crude oil has the highest chance of working out before 5 p.m. my time. So that's New York lunchtime. Before. If it happens after that, I will actually trade against it because it's outside of the hours that I know the failed auctions have a probabilistic chance of doing what they're supposed to do. Anything else is like, meh, right? Let's have a look at chat. The good news says, as a new trader, I found your levels quite powerful and useful to confirm my entries. I'm very glad to hear that. So pleased to serve and all that. Anthony Taylor, explain line 3 of your graph. I think you're talking about crude oil. Line 3. You mean GEX 3. It's like GEX 2, but with a little less open interest. It's from the options chain. It's not something you will see in the actual price action, not necessarily, but there will definitely be, how do I put it? They are reactionary areas that I get from the options market, and they are expected to either cause a slowdown, reversal, or in some cases an acceleration through it. But generally they tend to be resistive or supportive, right? Generally, you have to apply context to it. It's not like, oh, GEX 3, let's go. It's a little different than that. So yeah, it's just open interest from the options chain. That's all it is. Can you check platinum? I can check platinum. Can jump through the different time frames while I'm waiting for my RBOB, for R. Robert. We had R. Robert, aka Coach Robert, in chat the other day. That was quite fun. He was saying, stop playing with the Muppets, because I was playing with Pete. I wasn't playing. I was telling you about Pete the Process Parrot, and he was like, are you playing with Muppets again on your stream? And I'm like, well, if it's gonna reach people, yes. Okay, some old levels here. Let's delete those. What I'm seeing here, I mean, everybody can see this, right? Huge shooting star. Is it a reversal? Now, here's the thing. This is a monthly chart. So I'm okay looking at a shooting star, which is this purple candle. I'm okay looking at it as a potential reversal signal because it is a massive, ginormous time frame. So what does that tell us? Just that directionally, we could have found the top. Not a, do or die statement, just a factual thing that's already on the chart. Do we have a shooting star and an established top that is still in place, still in force? Yes, that's a fact. I'm not making things up, right? It's what I can see, what you can see, what everybody can see. On the weekly chart, we could be having a bit of a drop-based drop formation happening. Now, the drop-based drop is a formation from the supply and demand concept where you effectively go looking for either a rally base drop or drop base drop as a potential distribution into liquidation patterns. And supply and demand goes deep into the rabbit hole to see how the actual price arrived there. So did we arrive cleanly? Yes. Here's a very good example of a nice trending market that just keeps going. Ergo, we don't have anything in the way until we get to this area. We always look to the left, right? Do we have any areas that might cause trouble? No. I see none on the weekly chart. That's rare. So to me, platinum from this point of view looks very clean. Now, the drop-based drop, if it really is going to be a drop-based drop, it is a bit of conjecture here because I don't have the drop yet. Okay, so literally when you have drop-based drop formations, you have yet another big move to the downside. Right now, it's just settled into the range. Could this be a smaller summertime drop base rally to go back up? Yeah, that's a possibility. Why? Because we don't have the DBD yet. We just have the DB drop base. What happens after that, we can only guess. And there's no point guessing. I hate guessing. I just look at what's on the chart and I try and trade that. So could be a demand, could be a continuation, but here's where context comes in. The shooting star from the previous month, pretty strong reversal signals. So ballpark, I'm going to say we're probably going to see the drop at some point on platinum. Probably. But don't take me, again, 100% DSET go short on platinum. No. We could have found a temporary high, okay? Where it goes, it's anyone's guess. Daily chart, quite consolidating, very haphazard, not really a defined trend. Again, matches what we're seeing on the higher time frames. So you can also look for clues. How strong is the bullish engulfing, if any exists? Now, this is a bullish engulfing, but here's the thing. I did a whole workshop where I looked at the accuracy, just statistically accuracy of the candles. There were 2-bar reversals for signals and how accurate they were. And here's what I found, that the bullish engulfings that were weak, here's a concept of weak pattern versus strong pattern. If you have a bullish engulfing that doesn't close above the previous candle high, that's a weak pattern. More often than not, it signals the start of yet another range. Is everyone following me? So I'm going to repeat that again. If the pattern you're looking at as a reversal signal is a weak pattern, therefore the candle that should be changing the direction is not even making a higher high in relation to the previous pattern, that's a weak pattern. So for me, this would be more of a range rather than a bullish engulfing. And, we are falling into the range as well. So nothing to see here. Compared to gold, because remember gold, let's compare gold. Oh, lovely gold. Here we go. Very correlated products at this point, yeah? Very correlated. Gold, here's the high of the previous candle. Where did we finish? We finished higher. Here's the high of the previous candle, platinum. Where did we finish? Lower. Systematically, one is a weak pattern, the other one is a strong pattern. Which one of these two should show us a bigger, better move to the upside? I would say gold, right? Just outside of all context, I would say gold. Statistically, it's just how things are. You can even look at this on an intraday time frame, and it's even amplified when you go down to very, very tiny time frames like 1 minute, 2 minute charts. You need to see these strong candles. Rules change a bit, because instead of just smashing through the high and closing above it, for low time frames, I actually have to see it take out 3 trending candles that happened prior. So the lower the time frame, the stronger the signal has to be. So use that. That is literally from my candlestick workshop short course. That is what I teach there. It's a study on the accuracy of patterns that are strong versus weak. And I've never, ever seen anybody talk about a weak versus strong pattern. When you put that into context and then you go to bookmap and real-time order flow to look for a potential follow-through from those areas, that works as well, right? So you have I partial my monitoring for signals in 2 sections. So one is to just start listening, and the second one is timing the actual entry. So let's say you arrive at a level, then you start listening. Will there be a reversal? If it is a reversal, that doesn't necessarily mean you plow in right away. It means that you still wait for some kind of a volume increase or another condition that can push you into a trade. You can even drop down at that point when you have something on the slightly larger time frames like 15 or 30 minute chart. You can then drop down to super low time frames and look for the entries on whatever you want. It can be 100 ticks, 15 seconds, 1 minute, 2 minutes. Whatever systematic way you have to time your entries, that would be the approach that I would very much agree with from the point of trading and being a systematic trader and all of that. Officially, Jeffy says, I can't sleep, and here I am on this beautiful live with this beautiful background. I love the dog that is also about. Oh, which dog do we have? Ah, yes, of course. We have Astrid as the resident co-worker today. My co-host sleeping on the job at the moment with her tongue out. Well, that's because her tongue doesn't fit in her face. She's got like a massive overbite. It's hilarious. It's very cute. She permanently looks like a teddy bear. You know, you look at her and she's like, she's very furry. It's like floof everywhere. But yeah. Oscar G says, it would be good for me to follow you to see how you work with a vertical volume profile. So I prefer to work with a vertical TPO profile because I feel it has a lot more resolution inside it. Volume profile to me is just an area akin to the supply and demand, just in a slightly different way. You can drag out the fixed volume profile for the volume areas, volume value areas, which could be an alternative while we wait for TPOs to arrive. And don't ask me the timeline, I don't know. But yeah, the vertical volume profile is something I use less. And it's kind of just like a ballpark area. If we start to run from one area to the next, where do we have the space? And I typically use a 4-week volume profile to find those areas. So let's go like this, just to go back to middle of July. So where is that? That's June. That's July, so let's pop in a horizontal line there. There we go. There we go. And then drag this just to show the last 4 weeks worth of profile. So what do we have here? We have a thick area, just around 1346 on platinum. Then we have a hole, we have a cave. Look at that cave. Is there a bear hiding in there? I don't know, maybe. Maybe it's a bull. So here's the thing with gappy areas. Similar to some of the other levels, once they are smacked the first time, they give us a reversal. And it's funny because you can see it. So if I mark this as a low volume area from the 4 weeks worth profile, and then if I zoom in, you will see that it just touched that. It took out the previous high, touched the low volume area, and reversed. But if we ever get there for the second and third time, likewise this goes across the board for many different products. It's just the price behavior that's pretty much similar across the board. I would expect this gap to be filled. And if they start to go into it, it's equivalent to the single print fade or mitigated FVG or whatever the hell phrase you want to use these days. It's literally the same thing. But I'm taking it from a 4 weeks worth. That's how I use the vertical volume profile. So 4 weeks worth. On my platform that I use as my main charting platform, I do have that hard-coded. You can actually set it to anchor to 4 weeks, and then it will move as the time moves, so you don't have to mess with the chart. But this is the equivalent of that, so it's a visible volume range. That's how I use the vertical side of things. Now for the TPOs, they are intraday. I don't look at large time frames for that. I look at, it's still in October. I look at the intraday regular trading hours. Let me just get rid of the white colors, because every time I bring the white colors, you guys call me a psychopath, which is not too far from the truth, but it's not very nice. So here's the black chart. Maybe I can even change the color theme to be dark, so it can be very dark. It can be super dark. So here we go. This is how the vertical TPO profile looks like. It uses price over volume, but just with a click of a button, I can actually get my 4 weeks worth profile. Don't think I have it set on platinum at the moment because I think I was messing around with the charts. So this is only a couple of weeks worth. But that's the gist. So when it comes to the actual TPO profile, I prefer to look at it on the regular trading hours base, and then I will be looking at whether it's building structure, whether it's leaving the first hour of trading, whether we're touching the value areas or not. So all of that goes into me deciding if I should be in on something. And then as I'm in a trade, I can very clearly read whether the market is in a strong auction, medium auction, weak auction. And then I make my decisions based on that. I do not attach any belief that I'm going to get 20 ticks or 200 ticks. I don't know. Nobody knows. So I always approach my day fresh. I always say I'm like Drew Barrymore from 50 First Dates. She has a short-term memory issue after a car accident in that movie, and she can't retain any memories past one day. Her plate gets cleaned every night, so she's got a clean start to each day, as if nothing happened. So that's how I approach everything. Doesn't matter what happened the previous day, my brain was trained not to dwell on that. Okay? I never expect that I'm going to make a certain amount. This is why you see me perfectly fine making $70 and perfectly fine making over $3,000 and perfectly fine losing $200 or losing up to, let's say, 2.5K. So I don't know what's going to happen. So all I can do is just be as objective as possible, read what the auction is doing, and try not to attach my expectations to it. That has helped me in my trading more than anything else. But yeah, platinum, let's have a look at some options levels to finish it up. So what do we have? We have the expected implied volatility to the downside sitting at 1,311. We have a GEX1 level at 1345. GEX 2 and 3 are closer to 1350 and 1360, where the projected volatility is to the upside. So those are kind of your pinpoints to watch out for. There is another one, HVL, so that level that can flip gamma and likes to bounce on the first try, at 1320, 1318, let's say. So those are some of your platinum levels to watch out for. But yeah, it looks very clean on the weekly chart, which might mean in September we could get some nice reversals in platinum as well. Basil Sprout. First time on here to trade DAX or FTSE. I do. Unfortunately, Topstep doesn't have DAX. So yeah. Don't ask me where it's coming, because I don't know. I know as much as you do. We're actually thinking, like, I'm just kind of bouncing ideas in the background because it's all so quiet on that front, and these shows were meant for the European side of things to trade DAX, and then they had trouble bringing DAX into it. So now we're actually looking at potentially moving the time slot, but you know, it's still early days. I don't know whether it's going to happen. It's just one of the ideas that we've been kicking around to actually make this more like an LME start. So maybe started, 90 minutes later, and then we'll have the LME. Then we can watch how the LME opens. So it's kind of like the COMEX Open and London Open, but we actually have an exchange that is opening around about that time. So I don't know. We'll see. You could see some changes. It would also make it easier for me to kind of bring guests on that are stateside. So there are many benefits to that. And in light of us not really having a timeline for when DAX is arriving, I'm just being very straightforward with you guys. I don't know how much sense it makes because we have Aaron who runs the London Open, and then I'm just like sitting here, and then we have nobody streaming in the run-up to the actual main broadcast. So, there's many reasons why we might want to consider changing it. But yeah, it's still early days. We just literally spoke about it just yesterday, and obviously if there's any changes we will let you know promptly, but for now this is the time slot, and this is how it is. No DAX. Let's move on. Right, let's have a look at what the RBOB is doing now, because I'm still in that trade and I've jumped across different charts. This is also where it's very nice not to have scalpy trades where it's like, I'm watching it tick for tick, I'm watching it tick for tick, what is it doing? And I'll just leave it. I leave it. It's a breakout from the initial balance. And then I look at it again and it's like, oh, it's 70 ticks in profit. That's nice when things are moving. So yeah, let's see if it can actually reach a little bit higher up. We can look at the strength of the auction here. So that's something that we have as not on the daily chart, obviously. All right, that looks pretty strong. So here's the thing. We opened London. What is that noise? Like something's... I think it's probably my husband doing something in the garden. But I just kind of felt like a dog was digging or something. I don't know. Maybe he's digging. Oh, yeah, that's right. He's doing weeds behind my house. Yeah. So here's the thing. Quite open, right? We started creating structure. Why do I say that? Overlapping candles. Now, in the TPO profile, you actually see this as structure being built. I'm going to try and replicate something similar with the volume profile fixed range. So if we opened at 8, and then we started to see how the market is developing. Let me change some colors here because that is not right. I haven't used this for a while. So let's make the value area like an opposing color, like a yellow or something. Okay. No, that needs to be a little bit less opaque. I want this. Opacity needs to come down. Even though the candles, oh no, that's the up volume. Sorry. Value area needs to come down in opacity. That's the one. That is the one. Okay. Down volume, let's just make it like that. How does that look? Okay, it's a little bit better. A little bit better. So what are we seeing here? You see how this middle section, that is where the value area is being built from the visible, not from visible, fixed volume range. Very similar to the TPO profile. But once we break away from this whole area, we're now starting to see a thin single print potential being created. We won't know whether this is going to be a single print or not until the next 30-minute time frame comes in. This is just volume, but in the TPO profile, we are making decisions based on each TPO. TPO meaning just a time price opportunity, basically another word for just time frame. But they call it TPOs because it's like there's periods. So A period represents the time from 8 till 8:30. So it's the first half hour of London. Then the B period is 8:30 till 9, and so on and so on. So when they start to overlap, let's say A period is here, B period again here starts to be comprised in the same area. C period falls back through the entirety of that range. It creates structure. It means the auction is not strong at that point. We've created a structure. If the auction was strong, they would have pushed that third candle, the C period, outside of this first hour and gone into a thinner profile. Okay? Does that make sense? Is everyone following? But when that doesn't happen, you have to start thinking, is this, like let's say you were in a trade already. You were in Asia and you caught this move from here. So now London opens and you're like, okay, I know that the market makers are operating during the initial balance, so that messes with things a little bit. But generally, how is the auction progressing? Well, at this point, there's no auction. It's just shopping in a range. One thing that does happen though is that they start to build momentum from the London initial balance low, and then they break out. So that's the thing, that's the detail here. So messy, messy, messy. They never break the initial balance to the downside. So the initial balance low, the London initial balance range, so that's the first hour of trading, held. It held. And then we rotate through the whole range and break out. Where are we right now? We're just slightly above the initial balance. Is this strong? No. But this next one, if we close the next 30-minute time frame, which we have a while to go, that's going to create a strong auction if we're closing ballpark 97.60. And then on the profile, you will see that as a thin line, right? So thick line, it's got a belly, pregnant belly, and then it breaks away into, oh, I'm, flying to the sky, and we're having a good momentum to create these weak structures that are strong auction but a weak structure, right? Why? Because the price runs through them very quickly. Okay? Trying to illustrate that in like simple terms. That's how you keep track of how the auction is progressing. So now, for me, if we do one of the following things on that are against what I'm trying to do here, if we fall back into the initial balance, that means this thin line is no longer thin. It's basically falling back into the structure. That's not a good thing. So for me to then be high on hopium and just to go, I'm just going to wait and see what happens. But if everything goes right, and this is actually a good sustained auction, breakaway from the initial balance, that's going to be telling me that as we're progressing, so let me just adjust this visible, the TPO. Get it together, D. Let's start that again. This fixed volume range, slightly further out, to incorporate this new area. Look how thin that is. So they're continuing to push it. But the close, where it closes, the next 30-minute TPO is what we're going to know how to read. So combining the initial balance, the red box, combining the thinness or the thickness of the given vertical profile, it tells you what your next step should be. It doesn't rely on your own feelings, or how did Dolby say, your fifis, feelings, your fifis, to decide. You simply read. Do we have structure that's being built? Are we still pushing into a thin profile? Very, very straightforward for objectivity, right? And it can tell you very clearly when you're supposed to be out. Because you have not only, and let's say that we move away from these whole areas into like a nice trending day. Let's say that we get up to my target here. But then it starts to slow down. And then I start to see structure being built. It's like, oh, I wanted to hold it for like 4 hours, but 2 hours in, we don't have a new higher high. Now there's the next TPO that is starting to build structure. It's starting to build developing value, which will likely move with the advancing auction. And then you start to develop value up here. That's a distribution curve. It means it's distributing just underneath your take profit. So what do? Again, high on hopium, wait, please reach my target. Yeah, sure, it might reach it, but the objective part at that point when it's so close, like 75% to your original target, especially if you're aiming for 2R, just take it. just take the money and run for the hills. So you can see how some of us that use market profile to this advantage, it completely takes away your feelings and your inner dialogue. You're just literally like reading a book. It's like, well, is it thin? Is it thick? Is it distributing? Is it still trending? You can read it. You don't have to guess. That is the true power of volume and TPO profile. It's just that I prefer the TPO profile because of the components of the initial balance and the actual TPOs that are being created. So just to give you a little bit of an overview of how the TPOs look like Let me find it. Let me find it. So this turned into like a masterclass in the strength of auction show. I hope I didn't lose anyone. You know, I hope that you're not like, TPOs, oh god, D, you're boring. Hope I didn't scare anybody off either. Let's do green on black, because that's going to make it all nice and dark. Here we go. So here's how the TPOs look like. Let me move this chart down a little bit. I hope you're appreciating me using the dark charts that are very difficult on my aging eyes. So let's go fix maximum 2. 2? A little bit more. Okay, that'll work. All right, so same thing, just with slight, let's clean this up a bit. Just with slight difference in the TPOs. So here are the TPOs, and that's what we're all looking forward to in Topstep. We want to see TPOs and maybe even my graphical display. I was the first one to put a graphical display on it. My company was the first one to do it, and then other people copied us. So I was like, really? Could I have not patented that? But you can't. It's just a, it's not a proprietary thing. So yeah, copy away. We still have the backtest mode on the chart that you can see and go like this. So nobody has that. But yeah, so this is how it looks. Very similar to what I drew on here, right? Just in a TPO profile. So once we create this next 10-minute bar, on this TPO profile, you will be able to see whether you're creating a single print or not. And also notice that on this one, when I go into a slightly deeper resolution, you will notice that there's this little hole here that is not exactly visible, I don't think. It's kind of visible. It's kind of visible, but it's just not that obvious that there is a little gap there. So we've left a tiny single print trail. Tiny single print trail upon the break of the red box. So yeah. So that's how I decide whether I'm going to stay in or whether I'm going to bail. That's how I stay in, like, so let's say that we have a sustained auction upwards and nothing on the profile tells me that we're distributing. That's how I can stay in on trade for 2 hours, 3 hours, 4 hours, 5 hours, right? But if it starts to distribute and I'm expecting it to keep moving, that's all very well. But if it's not doing it, in about 2 TPOs after I entered, I will be able to tell whether it's continuing or not. So whether I should be holding or not. So again, objectivity is something the profile offers very easily without too much sort of skill development. It's literally just some letters on the chart in a vertical histogram. You're looking for thick areas or thin areas. That's it. Obviously there's more to it, but at the very core, that is what the profile intraday for direct, auctions that are in progress right now can do for you. Paul H. says, I just arrived at the end of that. What did I miss? Well, we went into the strength of auction volume profile, and it just somehow turned into a class on strength of the auctions and how to read them using profile. I think it's a very useful skill, right? Because you don't have to guess what's going to happen. You just read. Much better. Much better for your mental health. It tells you when you're wrong. It tells you when you should stay in. Very, very straightforward. And I don't know why. You can probably see the similar thing just by looking at the chart. But having that additional initial balance and the value area, developing value, to see how we're progressing. Like, for example, now on this chart, the value area is just underneath that. And the current price is above it, which speaks to the strength of the move still. So we'll see whether that continues or not. For now, it's doing well. But if it starts to fall into the initial balance, then it's not doing very well and I need to bail. Take my 60 ticks, and that is it. Yeah? How are we doing on time for time? Okay, we have a few minutes left. Let's have a look at chat. Let me just catch up on chat. Oh, Sandy is here as well. I didn't see you there. Oh, Paul. So if you have any, because we on Saturday, right? We have some people who are. It's like James's family and stuff. So if you have something on a USB, like sort of your 90s tunes and stuff, you might want to bring a USB. I'm not going to push you to DJ or anything, but just in case, you know, they're not happy with us playing melodic techno and and dance music, because some of them are family, James's family, and they're a bit older and stuff. So just in case, consider a USB stick, because. But no, I'm not going to push you to work or anything. So, you know, just come as a guest. And if you feel like putting on a couple of 90s tunes, I'm pretty sure that will be very welcome. But don't feel obliged. If you don't have anything on a USB or you can't be bothered, it's fine. Just come to have fun and socialize. So, yeah. Anyways, let's get back to the charts. And yes, I'm introducing Paul to the family. I'm just joking. We have a little gathering. It's nothing too major. All right. I did see a chat thing that I missed. Okay, trading nickels. Norman was. All these indicators really necessary? Well, look, I'm here after 18 years, so you make your mind up. You know, look, I get it. Like trading nickels says as a point. You're looking at somebody who's been staring at this stuff for 18 years, day after day after day after day. It's like looking at an athlete that has spent many, many years honing their skill, and then you have somebody who sort of like just kind of plays tennis on the weekends kind of thing. It's not the same. You won't know the techniques and everything until you get to a point where you, out of need, start digging further in order to progress in your career, okay? Until there's a need, people are like, this is fun, whatever. But if you're wanting to make this into a career, yes, there are certain things that you absolutely have to look at. If you're just doing this for fun and a little bit of extra cash on the side, that's fine. But some of us have survived and thrived in this career because there have been times when some of the stuff that the basic indicators that we were using were just not cutting it. You know, I've been trading since 2007. I've seen the credit crunch. I've seen the quantitative... the QE program, right? I've seen the equities die a death and not come back for 8 years. ES was trading in a 4-tick range for about 6 years since I started. Then they improved. Then we have COVID, so the liquidity came back. And now everybody's obsessed with ES and NQ because they're moving again. But, you know, when you go through different periods of market states, intraday is like trading in the Olympics, right? Any inconsistency that you have is going to come back to bite you. So if you don't think it's necessary, hey, don't use it. But I know what's worked for me over the years to make me not be glued to my bias, but instead to stay objective. And somebody asked me about volume profile. That's how I do it. I read the strength of the auction. If you're not finding value in this, you don't have to watch. You know, there's always that. So asking whether something is necessary for you, you probably have different goals. So yeah, maybe this is all over the top for you because you're not there yet. But for most of us who have been around the block a few times, you know, yeah, they found value in it. So yeah. TraderX with some sad news, blew one of my funded accounts today, sized up too much. Okay, so if you go into your setting here, do you see the symbol blocks and then symbol contract limits underneath? Let me just make sure. See that? Yeah. See that? So, TraderX, I would love you to start using the symbol contract limits because of that. If you want that never to happen again, that all of your hard work is eradicated in one day, use the symbol block, use symbol contract limits, use maximum trades per day. And before you sit down to trade, before you do anything, click this button, lock out risk settings for the day. Before you do anything. Okay? That way, you will never lose an account in one day. You might lose it in a drawdown, by doing stupid things one day, then it still doesn't work. But the odds that you will be doing silly things day after day after day after day after day, yes, we've seen it happen. But generally, statistically, it's more like you might suck for a couple of days, then you might have an okay day. Then you might get up and then back up with P&L. Then you might also have a bad day. So, you might lose it over time, or give yourself time to come back to your A game. Use these limits, please, everyone. Lock out your risk settings, use the risk limits, symbol blocks, symbol contract limits. That's what they're there for, to save you from yourself. I don't want to see our Euro crowd coming in and going, oh, I blew it up again. Why? Michael Patak gave us the gift of risk settings. Use them, please. It's the best thing since sliced bread for any. This is the first firm that has brought this. For every other firm, you have to have an external plug-in platform, which is complex to set up. Here, if you're going to take away anything from TopstepX, it's the risk tools. It's the risk tools. Even if you don't like it, you're like, nah, I don't like it. Great, but the risk tools, you cannot argue. You cannot argue that the risk tools are bomb. Or gas. Risk tools or gas. So now we have the close of the 30-minute time frame. Yes, this is still going. It is still going. But I do want to go and do some coding. So this is kind of just over 1-to-1. It might keep going up. However, I am going to close this position here for 337 ticks because, again, it's a combine. I am on fast markets later. I do not want to mess with my mental capital anymore. So we're done. We found a good RBOB trade today on the long side, which I hate doing, but hey, that's what the chart told me, so that's what I did. Anyways, that is it for now. Let me see if I've missed anyone. Trading Nickel says, I've been appreciating all the detail from Deeyana for over a year. Still learning things as I haven't understood the whole time. But since the first time I heard her on TopstepTV, put simply and framed, yeah. I don't know whether it's simple is the way to describe me. I do try and simplify whatever I'm saying. But at the end of the day, my approach might be logical to me and to my market stalkers, because I do teach it in very small bite-sized pieces in the pro development program that, like, I literally raise your skill level bit by bit. I don't overwhelm you with a 4-hour webinar. So I know that I can teach this to nearly anyone with like an IQ above 90. I could probably teach it to Astrid currently. Oh no, Rimmer is now on the. Oh, we've had musical dogs. Astrid was on the chair. Now we have Rimmer on the chair. So me and the dogs are going to sign off now until fast markets, when the Londoners, Aaron and myself, even though I am in Surrey now, we are going to take over fast markets. So we're going to do a little bit of alternative products, and we're not going to, hopefully not going to focus too much on NQ, which should be a very nice, hopefully a very nice, refreshing moment for fast markets. And yeah, that's all for today. This was the Euro Trade. Thank you so much for giving me your time. I will see you next week for another Euro trade. In the meantime, have a wonderful weekend. Please don't mess it up on Friday, because everybody likes to mess up their capital on Friday. Try not to do that this time. Let it be different. Do things that other people are not doing, and that's how you will stand out and go have a different result. That's all for me today. I'm Mark Stalker D. This was the Euro trade. I will see you later for Fast Markets. Take care.